my name is Mufid Siam, and today I will be discussing the mitigation of several risks in the construction industry. In addition to this, an in depth analysis of the construction industry will be conducted in relation to the risks along with the relevant mitigation strategies. Here is an outline of what I will be covering today. Firstly, the reasons of companies undertaking risk management will be defined. Then, an effective risk management strategy will be evaluated for the business in relation to these risks, which are operational risk, environmental risk, liquidity risk, market risk, legal risk, terrorism risk, political risk, reputational risk, credit risk, and technological risk. Um, Furthermore, I will have mitigation approaches for the construction industry will be explained. And lastly, a conclusion to wrap up the presentation. So, undertaking risk management. The uncertain economic times of the past few years have been a major effect on how construction companies and companies in general operate these days. Companies used to operate smoothly with the help of forecasts and projections now refrain from making businesses that it's judged that are set on a stone. Now companies have a renewed focus to risk management. Risk is the main cause of uncertainty in an organization. Thus, companies increasingly focus on identifying these risks and managing them before the event affects the business. The ability to manage risk will help companies act more confidently on future businesses and decisions. Their knowledge of risks that they are facing will give them various options on how to deal with potential problems and risks. Quick intro. So, the construction company and construction projects are initiated in complex and dynamic environments, resulting in circumstances of high uncertainty and risk, which are compounded by demanding time and constraints. Construction industry has changed significantly over the past several years. It is an industry driven primarily by private investors, and the presence of securitized real estate has increased considerably. It is vulnerable to the numerous technical and business risks that often represent greater exposure than those that are traditional. Risk assessment is a tool to identify those risks in a project and manage it accordingly with proper treatment. Risk assessment is defined as a technique that aims to identify the estimate risks to personal and property impact upon the project. In the context of construction industry, it is the likelihood of the occurrence of a definite event of combination of events which occurs during the whole process of construction. So the construction involves many variables, and it is often difficult to determine the cause and effect, dependence, and correlations. Hence, those risks play a significant role in the decision making and may affect the performance of the project. Risk is an exposure consequence of uncertainty. As a result, the subjective analytical methods that rely on historical information and experiences of individuals and companies have been used to assess the impact of construction risk and uncertainty. Therefore, risks assessment is a technique that aims to identify, estimate risk impact upon the project. So, identifying the risk, assessing the risk, controlling the risk, and then reviewing the controls. So now we'll start with the first risk. Operational risk. So, what is operational risk? Um, so, operational risk comes under many factors. I'm going to mention three, which is health and safety, labor shortages, and subcontractor default. So keeping workers safe should be the top priority on every job site. Site conditions can change rapidly, and unexpected hazards can crop up and anytime, creating unexpected project risks. Major accidents can result in serious injuries, fatalities to the employees. In addition to the potential harm of workers, a serious accident can cause work to be stopped or delayed, lead to a decrease in productivity due to low morals among the workers. This can put your project and your company in a huge financial risk due to to all costs associated with dealing with such accidents. It is far cheaper to invest in training, engineering, controls, which I will be discussing later on. So, also under operational risk is labor shortages and productivity issues. So, not having enough workers available to complete a project or hit productivity goals is a huge risk when taking a new project. Without manpower to perform the work, the project can suffer from longer construction schedules and potential delays in delivering the project on time to the owner. Issues with labor shortages have been increasing in the construction industry since the recovery and the last recession began. And the construction industry have been struggling to fill positions to keep with the growing demand in the services and the services. The construction industry had a huge loss of 1 million jobs from Feb to April 2020 due to COVID-19, but since then gained back around 80% of that in 2020, December. Um, so to fill vacancies, many construction companies have been taking on employees with little or no previous construction experiences. This isn't necessarily a bad thing, but there are additional risks that come with having less experienced crew. These workers won't have the same skill set as experienced workers, meaning they will be less productive and will probably need closer supervision when they are first starting out. Moving on to subcontractor default. So, dealing with subcontractors that fail to perform on projects is a major risk factor for general contractors and construction projects in the construction industry. Um, um, so, defaulting subcontractors that isn't meeting um, its contractual obligations can completely wreck your project as a construction industry and destroy your profit margin. Schedule delays also impact the other subcontractors, can result in costly rework, and no subcontractors start a job with the intention of defaulting on the work, but most statistics show that most of subcontractors do. So, in regards to mitigation of these operational risks, in health and safety, um, so before starting a project, holding a kickoff safety meeting with your employees and subcontractors can reduce the risk of health and safety, cover the risks and hazards that will present through each stage of construction, make sure everyone has reviewed and understood the safety plan you've developed. I will be discussing about that system of safety plans for later on. Topics covered in kickoff safety meetings should be included in the work practice, and the section that uses proper personal protection should be emphasized, which is PPE. personal protection equipment, and because so because of the practices of the project. Discuss engineering safety measures as well, holding toolbox talks daily or weekly to reinforce your commitment to the job safety. And focusing on high risk scenarios, informing workers about changes to the job site or working conditions is essential as well. In regards to labor shortages, to combat labor shortages, offering competitive wages and benefits to develop a strong company culture that values employees and rewards hard work and dedication. This requires time and money to invest in training and development of the workforce, but pays off by having
It's 3 o'clock.
workers that provide opportunities and training and better educated workers overall. In regards to subcontractor default, being proactive in monitoring your subcontractors if you suspect things might be getting off track. Common signs would indicate that delays in material deliveries, failure to pay, there's and supplying on time. So replacing terminated subcontractors, supplementing their uncompleted work can kill the project. Therefore, um, implying ISO system would help mitigate all the subcontractor default. The ISO system could be a backbone for the construction industry in regards to operational risk. Moving on to market risk. So market risk is the probability of loss due to the factors that impact an entire market or asset class. This can also be identified as an undiversible risk because it has the ability to impact all asset classes and unpredictably. Within this risk lies four primarily classes of risk that I'll be discussing later. The market risk the market risk in construction firms may face vary depending on whether they are local or international. However, such risks include bidding procedures, availability of construction workers, and availability of resources. Uh, Important factors that international investors should consider. These include technological advantage on the local market, which impacts the market itself. One common adopted form of risk mitigation in the international markets is to form joint ventures or partnerships with local companies to draw benefits from their knowledge, expertise in the region or country. However, this approach may not be helpful at all times of low proficiency and local professionals in a host country. So, depending on the joint venture itself. Liquidity risk. Liquidity risk. So, what is liquidity risk? Liquidity risk is the risk that a business or individual will not have sufficient funds to meet its short-term financial commitments, promptly due to inability to convert assets into cash. The impact of liquidity risk on the construction field arises due to the differences between the actual cost experienced and budgeted costs owing certain methodologies, estimations, and assumptions used. Price fluctuations in the supply of raw material and adverse movements in interest rates can also cause liquidity risk in the construction industry. In regards to mitigation, the key element of measuring and managing liquidity risk is the ability to identify warning signs of liquidity crisis. Construction contractors must manage the risk that could impact their business growth by planning effective actions in cause where the problem manifests and forecasting cash flows, regulations, monitoring, and optimizing net working capital. Managing, as well as managing existing credit facilities, transferring the contractual clause and insurance, and opting for additional bank financing. That is, yeah. For credit risk, so what is credit risk? It's a possibility of a loss resulting from a borrower's failure to repay a loan, to meet a contractual obligation. Traditionally, it refers to the risk lender on not receiving owed principal of interest, which results in the interruption of cash flow and collections. In the construction industry, um, basically runs on credit, and almost every construction industry participates in furnishes their work and materials without repaying payments prior to delivery. And on many projects, the value of the labor or materials furnished is substantial. This credit based payment scheme extends all the way through the payment chain. And most companies both extend credit and need a line of credit on their own. It is not uncommon that the payment of the company owned bills delayed until the payment is received from parties higher in the contracting chain. Construction's credit heavy system presents challenges for the construction financial managers, which is CMFs, and other credit professionals who work in the construction industry. It is generally the CMF's problem to deal with. Remaining in the security position with credit extended should be primarily the primary goal of the CMFs. Extension of the credit security is by a collateral, uh, generally improved property itself, are much more likely to get paid. Um, but it could be otherwise as well. It depends on the situation. The security in the form of the ability to file a valid mechanics of lien is the number one weapon to combat the non-payment of the construction industry as well. Further, even on the projects which notice is not required, the primary notice can be effective to prioritize a company's invoices. And a good construction financial manager, therefore, understands the value of the primary notice and would implement it as well. So the legal risk is the potential loss that a company or individual could face as the result of a legal issue. This may be in the form of a claim made against them, an alteration in the law, or failure to take the proper legal measures to protect themselves. Recent changes in the multilateral system utilized in the construction industry through the addition of construction managers have significantly impacted the allocation of risk assumed by the parties involved in the construction project. Further, the mitigation arises and conflicts questions relating to the parties represent due to responsibilities and legal system. Contractual risk associated with the legal claims can arise in failure to poorly perform duties assumed to the contract by failing to exercise due to care in the performance of their duties. Other legal risks associated with the construction industry include real estate, financing, insurance, and irrigation. So, ways of mitigating these risks, especially during these times with several consequences due to COVID-19, is to is important that both employers and contractors inspect early stages that the positions in both and under construction contracts into which they have entered order to establish the scope of each party's rights and duties during this period. The nature of extent of the relief provided from the procedure of invoking these rights with the viewing to mitigate or mitigating their respective liabilities, risks, and exposures on the project very carefully. Terrorism risk is identified as a strong external force that can impact social infrastructure and operations violently. And particularly in the construction industry, the term terrorism risk can be identified as the threat of violence by an individual or a group in order to gain social or political influence over a particular party. With the wide range of terrorist attacks in certain regions against the government infrastructure, private and commercial risk terrorism attacks have availed civilian military infrastructure. Therefore, the higher rate of terrorism attacks in the region is a direct investment decrease greatly within the country. Projects in the construction industry correlate negatively with the increase of terrorist attacks as the result in poor performance of industry's economic scale. Therefore, these attacks generate a substantial workload on the construction industry. Mitigation and effective strategies must be implemented, especially in these areas, in order to proficiently scrub the risks. In order to effectively mitigate the risks, construction companies require a greater amount of security, along with safer designs and infrastructure across all projects that can withstand these attacks. And another way of mitigating the terrorism risk would be to have alternative projects in place to replace the attacked infrastructures rather than replicate the destroyed projects, and the same project may be attacked again if it's in the same certain location. Technological risk. Technological risk refers to any risk or financial loss or damage to the reputation of an organization as a result of the failure of its information technology systems. Cyber risk, which is a subset of technological risk, can also disrupt businesses' functioning. Um, Technical problems, including design and engineering issues, poor assessment of local environment, indicate contractual analysis, and lack of effective IT and cybersecurity branches could adversely impact the operations of a company, and especially in the construction field. Technologies using the internet, so mitigating the terrorist, the technological risk would be using the Internet of Things, LOT, devices that are emerging tools to manage risks on site in regards to construction, adapting new methods and technologies such as building information modeling, BIM, cloud-based technology for collaborating the documents and communications, and implementing artificial intelligence, AI, and machines learning can help identify job site risks at human level that might not be able to be that humans might not be able to assess. Political risk is a type of risk faced by investors, corporations, and organizations that political decisions, events, or conditions will significantly affect the profitability of a business sector and expanded into the construction industry in regards to given economic action. Any political change that alters the expected outcome and the value of the given construction project can impact the profitability of achieving construction objectives in general. But political risk in construction projects may occur from the beginning of the project life cycle until the completion of the project. It refers to uncertainty related to political events like violence, regime changes, revolutions, breaches of contracts and law and wars, um, to that would delay the construction project or might hinder its ability to continue. Ways to mitigate such a risk is monitoring and managing the appropriate use of financial instruments like political risk insurance, tradable instruments, and ownership of structure, effective instructions of public sectors, and advocacy of strategies, and ongoing community and involvement during the operations can be practiced to reduce the impact of political risk in construction and infrastructure fields. Reputational risk. Reputational risk can be defined as the risk of harm to harm the business reputation, which often concerns matters such as safety, ethics, security, sustainability, or even bankruptcy. This can be identified throughout several factors, such as measures that organizations can take as a whole, or through suppliers, partners, employees, or subcontractors. Forms of reputational risk that apply within the construction industry can be infrastructure of a project, poor materials provided by supplier, impeding and durability of the infrastructure of the project, the inability to listen to customer demands, lack of compliance to laws and regulations, which impact the safety of the community. In order to mitigate these risks, construction fields should strive for an effective communication methods concerning the company image and brand that they're building. Organizations and the construction industry that hold a strong brand image that tend to be customer centric, tend to focus on value propositions in order to effectively execute a project following this method. Um, so having this method implemented enhances operations through more thorough measures and proficient performance undertaken during each stage of the project. This also includes implementation of effective performance metrics in order to monitor and measure the adjustment performance of the frequent basis. Moving on to the final risk, environmental, it's an important factor to consider because natural disasters happen. If the job site is near to a fault line, or the project manager should consider the risk of earthquakes, floods, and hurricanes, um, which can really impede the project's performance. Hurricanes and tornadoes, high winds, which has high winds caused to damage many construction projects in the past. When wind speeds exceed 100 miles per hour, the consequences could be devastating. Many traditional builds in the construction industries and buildings simply are not equipped to withstand the force that end up facing extreme damage. Because natural disasters involving high winds are becoming more common, construction companies should implement to construct buildings that can withstand weather and storms. Many of the same practices that are used in hurricane prone areas are now being used in areas where tornadoes are common since it's been experienced. Practices like creating load path community from the roof to wall connections, all the way through the wall to foundation connections as well, helps keep roofs detaching during high winds. In regards to floods, in constressed areas, homes are commonly built on sitless or pier foundations. This is something that the construction industry should adapt to. These type of constructions allows even major floods to flow underneath the home or building without causing any damage to the building or house itself. In regards to earthquakes is out of the three the most common one in regards to mitigation in the construction industry. Earthquake presents their own unique challenges. Like strong winds and unlike strong winds and tornadoes, these events can destroy buildings in a matter of seconds. Withstanding seismic activity, however, requires different techniques and materials than withstanding high winds. Um, Construction companies, in response, should implement builders to create structures that are capable of withstanding significant damage without losing their strength or stability. This helps prevent buildings from collapsing from earthquakes. Steel is a highly ductile material, so it is often used in structures in areas and hurricanes that are provided. So the research that I've done that has to do with earthquakes and prevention from earthquakes, builders should start implementing a wide variety of materials, techniques like absorbers should be placed in the building to minimize horizontal movement in skyscrapers, and massive pendulums should be installed to absorb vibrations caused by the earthquakes. So to conclude, the construction industry embodies many risks such as legal and operational, which is the most significant, credit risk as well, and environmental. In order to mitigate these risks, therefore, and avoid them to run their course, there are several strategies to mitigate these risks. Overall, the core element of the analysis for this construction industry, as well as all other industries, to be able to identify risks, establish controls to limit these risks, and have strategies in place to mitigate these risks in order for profitability to be at its prime. Thank you.